Welcome to ESG Decoded, where we unravel the business complexities at the intersection of environmental, social, and governance issues.
I'm Erika Schiller, and I'm joined by my ClimeCo colleagues, Emma Cox and Anna Stablum.
Get ready to explore the intersection of sustainability, innovation, and ethical leadership, the dynamic forces shaping our global economy.
From climate action to social responsibility, we're here to decode the ESG landscape by interviewing interesting leading figures across the globe that will empower you with actionable insights.
Whether you're a seasoned practitioner or just embarking on your sustainability journey, this podcast is your compass for navigating the future of responsible business practices.
Let's decode ESG together.
Welcome to ESG Decoded. Today, I'm thrilled to have our guest, Alexis Glick, on the show. For nearly 3 decades, Alexis has successfully built businesses and led teams in finance, media, and private equity. A passionate leader with a track record for building winning teams in hypergrowth and rapid turnaround environments, Glick led the record-setting sale of Nature Energy to Shell for $2 billion. She pioneered the largest public-private partnership in American education with the NFL and launched the Fox Business Network. The first woman to run a bulge bracket business for Morgan Stanley, Glick is a director of GAMCO, Mario Gabelli's investment management firm, and Schreiber Foods, an $8 billion global food and beverage producer. She has raised $200 million for food insecurity and youth sports programs. Glick is a graduate of Columbia University, also my alma mater, a Kauffman Fellow, a John Jay Award recipient, and a proud mother of 4. Additionally, Glick is a self-described culture warrior and sports fanatic. Alexis, welcome to the show.
Thank you so much for having me. It is great to be with you.
Well, I'm so excited about our conversation today. You and I have regular touch points, but this is a little bit different, and I'd love for our listeners to get to know you better. So, Alexis, tell me, let's get started with what does an average day look like for you? Because based on your bio, it really seems like you do a little bit of everything.
Yeah, well, boy, oh boy, is that the cat calling the kettle black? Yes. There is no one day that looks alike. These days, for me, most of the time that I spend is with portfolio companies in both private equity and venture capital, where I am either a board member, an advisor, or an investor. And so most of the time, I'm sitting down with those companies and taking a look at their growth rates, their priorities, their plans, their ESG, a whole host of things, and really helping architect a path forward for them where they can meet those KPIs and hopefully exceed them. And then I throw in a little bit of, mom for 4 kids, a little bit of TV here and there. And then I'm on the boards of directors of a couple of other companies. So every day is really dynamic. And the breadth of the different industries that I interact with and advise are vastly different, which I love because I am able to see things from one industry to another that can really affect enormous change. And it's an awful lot of fun doing that.
I love that, Alexis, and I can certainly relate. The way that I describe my career and the purposeful nature of building that career has been around adding diverse perspectives. And it sounds like you've done that not only in your career, but you do that purposefully day to day. So I can appreciate that. Well, Alexis, the show is called ESG Decoded. So we're going to get into ESG a little bit. And I know this is a topic that is near and dear to your heart. And you have a really unique lens, I think, for ESG, having a Wall Street background, a business background, media background, nonprofit background. So can you give our listeners just a little bit of your perspective on what you feel sort of ESG actually means in today's business context? Obviously there's the political landscape that we're having to navigate today, but just give us sort of your take on what's going on today with ESG in business.
Well, I think you have to step back for a second, and as someone who sits on the boards of public, private, and both private equity-backed businesses and venture businesses, it's a topic of conversation in every boardroom, regardless of size, scale, industry, capacity. And I think when you look back, right, to when the phrase ESG was first coined, which really kind of was in the early 2000s, I think it was in 2004, it really didn't take widespread adoption or become sort of this viral political buzzword as we know until the 2010s, give or take. And then we know what happened in and around heading into the 2020 thereabouts. Right. We just saw this frenetic activity, which was really linear with all things related to Paris Climate Accord, science-based targets, more movement around ESG mandates and SEC reporting and guidelines. Right. So it became nomenclature. And in some ways and shapes, right, as we know, ESG, vital to its core, if you're sitting in a boardroom, helps us evaluate and assess risk. It helps us evaluate and identify opportunity. It helps us navigate as both a board member and on behalf of our investors, understanding, right, what are the assets, risks, and quantifiable things we need to do as fiduciaries of a board to ensure that we are operating our business in the most effective and successful way on behalf of our stakeholders, right? So I think if you look at it from that lens for just a second, Emma, right? It's core to what we do. It's core to the role of governance in the boardroom, and particularly in the world of public companies where ESG and meeting those net zero targets or those goals was something that everybody was talking about every day, every hour of the week. We find ourselves in a scenario today, as we know, right? One of it is, it's a combination of misuse, a combination of did ESG become an advocacy for certain constituents? Did it become, some folks are saying, it became a woke agenda, right? There's this, like everything in life, greenwashing, right? There's a movement and then there's backlash. And what we have witnessed, I think, in the current climate is this enormous fear and repercussion associated with being too emboldened about your ESG agenda. And I think some of that has to do with the current political environment. I think some of this, though, also has to do with the fact that many corporations, while I would argue in some ways, because of the competitive juices, because of the fear that the biggest asset managers in the world were going to determine how much and what they invested in those companies. If you look at the three largest asset managers in the world as shareholders, the BlackRocks, the Vanguards, the State Streets, who have 20 to 30% shares in a lot of major multinational corporations, companies were on the hook to come out and make commitments. But the reality is, if you sat in a lot of boardrooms, their ability to actually meet and achieve those commitments in those timelines, I would say over the last couple of years, has become a cause for concern. We're going out, we're setting X objectives, we're talking about scope 1, scope 2, scope 3, but can we do it? Is there the pathway? So I think that was the first movement that we witnessed over the last couple of years. Of course, we had a very pro-political market with an Inflation Reduction Act. And, you had Repower EU in Europe, right? CSRD. You had all these sort of tailwinds in support of an ESG agenda. But little by little, you could hear some of the cracks, particularly those around greenhouse gases. I think now the current political environment is such that, particularly in the United States, you'll have as a board, you have an ESG, oftentimes you have a subcommittee, you have governance metrics, but right now you're essentially keeping those behind closed doors. You're being very targeted as to where and how you articulate your ESG journey because now there is growing feedback around the backlash.
Yeah, that's I think a very accurate assessment of what's happening right now. But you said a few things I want to just follow up on, which one being sort of the initial wave of target setting and companies feeling pressure to set these aggressive targets. Do you feel like part of the problem is that they were too aggressive, right? They came out too aggressive, wanting to sort of be a leader in this space, feeling pressure from investors. So that's part one of the question. And part two is, at the same time, you have this sort of juxtaposition of the fact that someone like me can say we are in a climate crisis, right? And so many experts, environmentalists will say we're not moving fast enough. And so on the one hand, you have, companies setting these aggressive targets that they can't meet. And then on the other hand, we've got to move faster. So how would you rectify that?
Yeah, no, you're spot on. The issue here, right, Emma, is that when you are, as a company, when you're making investment and business decisions, and both in the boardroom as your fiduciary responsibility, right, you are looking to mitigate those risks. And everybody, I think, uniformly understands we have an environmental risk to how we operate our business every day. But an enormous tailwind that allowed and helped businesses to prioritize ESG was also a simultaneously very low interest rate environment, which meant you were not taking money from Peter to pay for Paul. You had the capital markets in your favor. You had a political environment, both in the US and Europe, in your favor. And then you had the role of competitive juices, of mandates, of expectations among investors that you're reporting those scoping, right? So you had this perfect storm in a positive way of reasons for you to come out and take an aggressive stance. And the capital markets allowed you to do so. And then you had things like the Inflation Reduction Act, where you could get more government support and funding at the federal level or, frankly, at the state level, right? Now you find yourself in a situation where interest rates are high, and we don't see that getting much better anytime soon. You have a framework in which obviously there is the enormous uncertainty around tariffs and this just sort of this kind of, where are we going? What does the future of our interconnected economy look like? Now, I don't think this tariff conversation as we're sitting here today is something that is consuming my hearts and minds and souls for the next 2, 5, 10 years. You have to have long-term strategic thinking, and you can't let short-termism affect your decisions. But you also have to, be realistic. And right now, when the house is on fire, what are you prioritizing?
Right.
You got to put the fire out first. It doesn't mean that boardrooms are not having the conversation, that they're not prioritizing it, that they don't know that the next generation of consumers are not only A, value-driven investors, B, they care about our climate, they believe the environment is a problem, they want you to stand for something. The social piece of it is really important to them. What do you stand for? So when you're looking at your stakeholder, your consumer, they care. The issue here is that because of this current climate, a combination of a somewhat fragile economic scenario combined with a political environment that's dialing back much of the pro-ESG agenda is just changing the tides. The last thing I'll just say to you about this, right? Because I say this to folks and I'm in the boardrooms of big and small companies. Avoiding or dialing back or stopping your ESG strategy in and of itself is its own risk, and a dangerous one at that. So my sense of this is that you're just going to see folks be much quieter about it.
It's a communications game.
Exactly. They're just not going to be as vocal about it.
Right. That's what I've been saying to people. That's my general assessment of it. But don't you think, Alexis, too, part of the answer here is that businesses really need to think about ESG as a business driver. part of the reason why I love what we're doing at ClimeCo. We're really tying the consumer into these sustainable choices, right? And that drives the bottom line for these businesses and making it easy for them to participate. I think that's going to be the answer here. So let's move on a little bit to the S in ESG. This is a topic that I know is near and dear to your heart, Alexis. Are you a founding member of Gen Youth? Can you tell us a little bit more about that?
Yes. And Emma, I will tell you, I couldn't agree with you more just on your last point, just the importance of it. And I will say, from what I've learned, so the work that you're doing at ClimeCo, when you just look at the role of the offset market to the inset market and how you can help companies not only look at their scope 1, but look at who in their supply chain, who truly represents their scope 3, can make the right decisions in the value chain to really help create an inset marketplace, is actually what I think is one of the most important and revolutionary things that we will see, particularly as we look at sort of version 2.0 of the science-based targets. But we'll come back to that in a moment. In regards to Gen Youth, we started in my apartment. And, about 3 of us started in my apartment, but it was actually born, the entire notion of supporting the health and well-being of this next generation was actually born out of the agricultural industry and working with America's dairy farmers. Most folks don't realize this, but in your local community, the role of farmers in supporting the agriculture into that local school community and their relationship with school cafeterias is vital. And what America's dairy farmers had done is not only had their farmers been extensions of the school buildings, but their school nutrition folks. And they had assembled about 40,000 of America's dairy farmers had come together and said, if we're going to stand for something, we want to stand for the health and well-being of this next generation. And they then wound up partnering with the National Football League to say, how can we do this together to create some fun for kids, when they're getting active and moving, but also providing them the right nutrition resources. And as they partnered up, they came to me and said, we want to take this thing to the next level and blow this thing up and bring all the right parties to the table to ensure that we are creating the impact that we believe we can. And first of all, the business, the nonprofit Gen Youth, is now run by a woman named Anne-Marie Kothheim, who I love. In fact, she is at the NFL draft as we speak, hosting the Taste of the Draft for the first time ever, and helping support food insecure youth. But look, at the end of the day, the reason we did this is that 35 million kids in America, essentially without a school meal, go hungry. And of 55 million kids in our school system, that's a harrowing thing. And 1 in 5 kids in America are food insecure. So what can we do to get them healthier meals, access to physical activity, and really set them up for success in the classroom and in life?
I love it, Alexis. Again, I remain amazed of all the things that you're managing to juggle and the impact, the positive impact, and really the legacy that you're leaving. So what a great story to tell. Okay, let's get to another topic I'd love to discuss with you, which is what I like to call boardroom reality check. So we want to sort of hear a little bit, and as much as you can share thematically, about what goes on behind closed doors, right? So what are boards actually saying about ESG? What is the conversation like? How have you seen it evolve? Just speak a little bit to that.
Well, I think it's been an evolution, not a revolution. So when you look at how boards, oftentimes it would be an update, maybe not an agenda item, or perhaps even not a full committee dedicated to it. And you've seen an enormous change in that regard, right?
Yeah.
So now when you're looking at your operations, when you're looking at your footprint, when you're looking at your CapEx plans, when you're looking at expansion, and oh, by the way, your team, your people, your growth, your expansion, hiring, retention, every part of that is connected to your ESG strategy. So oftentimes the way ESG has lived is it's lived in one way, shape, or form in all of those things, right? When you're talking about your financials, right, there's an impact, right? When you're talking about your commitments or your expansion or your growth, it's a piece of it. But more and more, it has really garnered its own place in the agenda in the boardroom for a variety of reasons. And some of that is the fiduciary, the reporting, the verbal commitments that you make to investors. So it's really, really evolved. Now, it's tampered a bit now by the fact that when you're preparing to go out and do your quarterly earnings in today's environment, it's not one of the top 3 things that you need to convey to your investor base. So I think that, as we discussed earlier, the communication around it and the fact that the SEC's dialed back the mandates has actually taken a lot of the focus publicly off of it.
Sure. Yeah, that's true. And we think about sort of convincing key stakeholders to buy into an ESG initiative that the company is trying to drive, right? And so I wonder if there was a time that you can remember and share anonymously about an aha moment. Was there a time when minds were changed? Because in this industry, as you and I both know, a lot of this is about behavior change. It's about shifting mindsets. It's about reframing. It's about building a solid business case and having the right points of influence to the right people. And so, not to put you on the spot, but this is, I guess you signed up for this, Alexis. Is there a moment you can remember where you noticed a change of heart?
Oh, there are so many examples, Emma. There's sort of 3 different angles for me. One, when you're the leader of a not-for-profit that ultimately supported 40 million school-age kids in every state in upwards of 75,000 schools. And if you put your ESG lens on in that role, part of what you're trying to do is bring the public and the private together. So you're bringing corporates in support of essentially an SDG goal, right? That's in our backyard here in America. And sometimes they had their own goals, right? But they couldn't deliver on those goals the way our public system is set up, right? Because there's all kinds of rules and regulations and politics associated with touching or being in a local school environment. That is a dicey thing, right? Is that, what does a company do when they want to create the change? They want to tackle hunger or tackle a crisis locally in the environment, but there's the politics doesn't allow them to do so. So I had more than a dozen cases like that where the public sector was sort of stuck in, a mindset that maybe worked 10 years ago, but doesn't work today, and trying to bring them along on the journey and help them understand if you create this public-private partnership, you'll solve those key ESG concerns. On the other side, I have been in scenarios in both boardrooms and companies where they didn't have a focus to the degree that they should have on reduction of their greenhouse gases. And I said, listen, you may not think it's a priority today, but here's the thing. If you're a B2C company, you got to care about it because your customers are going to demand. And one day when the blockchain is transparent and available, they're going to want to know where these things are sourced from. And number 2, the other thing I have said to many, because many businesses are B2B and they say, oh, well, we don't report data to consumers. And I would say, well, full stop. But you're a B2B business, and some of the B businesses that you do business with are consumer-facing businesses. So even though you're a B2B, you're B on the other side of that. You are their scope 3, right? Or they are yours. And so, helping them understand that what you might think is maybe not a priority could be a priority for one of your partners or your consumers. And then the final thing, which we really haven't touched on, Emma, right, is this whole idea of the kind of notion of D&I, the notion of a diverse workforce, a diverse boardroom, that the makeup of your company reflects the makeup of your consumer and vice versa, right? We've seen this enormous pendulum on this and now this notion of reverse discrimination. But that's another thing that I've spent a lot of time on, which is making sure that you reflect who you're selling to. You reflect the nature of the world we live in.
That is such a powerful statement, Alexis. And it sounds like you can add another title to your bio, which is you're a reframer, right? And this is something that I say a lot about my job too, but it's listening and then it's figuring out a solution. And a lot of that has to do with reframing and positioning and making it relevant to the business, right? Relevant and valuable. And so a lot of our job is reframing to make it relevant and valuable.
And look, Emma, the reality is that we're going to see cycles like we're seeing in ESG where, one day everybody wants to talk about it and the next day they don't, and, up and down. But at the end of the day, think about the words ESG. They're not going away. They are essential to the fabric of every institution. What we do to the environments, to the places in which we work and live every day matter. What role we play in the communities in which we live and work matters, and it will continue to matter. The governance and the role of being a fiduciary, regardless of your big, middle, or small, is essential, right? 2/3 of our economy are small businesses, right? But those small businesses either sell into larger businesses, they're a part of the supply chain. We're all interconnected. So the ESG of what we do every single day plays a role. And it's not going anywhere.
Yeah, I could not agree with you more. You said earlier that ESG is core to what we do and core to business. And you just reinforced that. But I think, also saying it's essential. It's not only core, it is essential. So great. We're going to near the end of our time together. But before we do that, Alexis, I want to do a little bit of a fun rapid fire Q&A for you. So we'll keep these really quick. The fewer the words, the better. But first one I have for you is biggest ESG myth.
That it's a woke agenda.
Love it. What is one ESG metric that you always track? You always check?
Scoping.
Most impactful business decision or just life decision for your career?
Ooh, that's a good one. Put yourself out there. Take risks.
ESG trend to watch in 2025?
The risk that corporates see it as an opportunity to walk back their ESG commitments because they feared before this that they couldn't meet them.
Spot on. And one company doing ESG right, in your opinion?
PepsiCo.
Love it. That's a little plug for PepsiCo. All right. Well, I like to end every podcast episode by giving you the floor, Alexis. This is a platform that we want to give people to use their voice and send messages out to the ESG community. So I give the floor to you to give us some parting words.
Well, I think the first thing is, Emma, you and what you're doing at ClimeCo, I think is outstanding. The work that you have done around both certificates, insets, offsets, engaging the consumer in purchasing items, whether it's a Lenovo laptop or whether it's a product on Amazon with the ClimeCo logo and the green leaf, where we know that we can buy a product that's sourced and that has reduced or removed those greenhouse gases, is a game changer. So number one, I think I would love folks to know more about what ClimeCo is doing, because I think you're really helping those of us on the journey navigate it, do it right, and help us get to a place where I think the consumer wants us to be. I think the second thing I would just say about ESG is let's not forget our why. I often say to CEOs and companies, what is your why? And it is often the hardest thing to answer. And I think we as an industry need to ask ourselves in ESG how to define that why. I mean, I've read a Harvard case study that said we should take the E, the S, and the G, and we should separate them because they each deserve their own platform. And that sometimes by combining them, we actually conflate their role. So I think one of the things we as an industry can do on a go-forward basis is get really sharp on the why, because the why is different for greenhouse gas emissions than it is for the role you play in the community, and it's different than the role you play as a governance scenario. I think the last thing is we've often talked a lot about stakeholder capitalism and the role of business in the communities in which we live and work. And I would just simply say that a lot of leaders are afraid to be very vocal and be out there, particularly in a moment like this where a snippet of something you say or do can be taken out of context. This is the moment in time where we need leaders to stand up. We need companies and businesses to make the commitments and deliver on them. And where we really, really need us as leaders in the business community to not only say what we think is possible, but do it. Don't stand for something. Do something. They're two very different things, but this is where, just like in COVID, often many of us looked at the leader in our company, the founder in our business, and that was our place that we cocooned. I think that is the same environment we're living in today. We trust those around us, and we need to take a stand for the right things and not be afraid to step up, particularly in our communities where we are really needed more than ever.
Oh my gosh, Alexis, how powerful. So takeaways for our listeners is 1, check out ClimeCo, work with us. I didn't pay her to say that. 2, what is your why? I think that's a great prompt, Alexis, for businesses, but also for individuals, right? Great reminder to always be thinking about that. And then number 3, thank you for your call to action for bold leadership. This is what we need today, now more than ever. I couldn't agree more. So with that, I think that is a perfect place to wrap, even though we could continue this conversation, I'm sure, for hours. But thank you so much, Alexis, for coming on the show, for sharing your words of wisdom with our listeners. And I hope we can continue the conversation. I know we will.
100%. And thank you so much for having me. It was a joy to join you. And let's do this again.
Let's do it. Thanks for tuning in to ESG Decoded. We hope this episode has inspired you to take action in your own ESG journey, stimulating ideas for partnership and innovation.
New episodes drop bi-weekly on Tuesday morning. Subscribe now on your favorite streaming platform to stay in the loop.
Join the conversation on social media using @ESG Decoded or visit ClimeCo.com for more resources.
Until next time, keep decoding, keep innovating, and keep making a positive impact.